Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is to get everything you need to know in 90 seconds at 9 o'clock, with news growth is to be sacrificed to get the inflation genie back in the bottle, and the resulting pain accepted as the cost of doing so. But first, softer consumer spending and higher inventories put the American first quarter GDP further into negative territory in their final revision of economic activity in the March quarter. Although these latest revisions were minor, they did feed into recession jitters in financial markets. But American mortgage applications rose slightly last week, while their benchmark 30-year fixed mortgage rate fell. That juiced up their refinancing activity. Meanwhile, speaking at an ECB meeting, the US Fed boss reiterated the US Central Bank's commitment to do whatever it takes to control high inflation, including risking a recession. He said the bigger risk is to fail to restore price stability. Powell said there is a risk the US economy will slow more than they want to see, but painful shocks may be the price that has to be paid. He also confirmed the Fed will be raising rates fast and aims to move into restrictive territory fairly quickly. And either another 75 basis points or 50 basis points increase is expected in the July 28 meeting. More positively, Japanese retail activity is rising, and by more than was expected. And in China, their central bank said it is preparing a new round of vigorous monetary stimulus to support their flagging economy. At least they don't have material inflation there. And Germany reported its June inflation rate, and unexpectedly it came in less than the 8% forecast. In fact, it's 7.6%. On an EU harmonised basis, it's running at 8.2%, which is lower than the 8.8% expected and the 8.7% in May. The month-on-month change was very little, so maybe they've topped out there. In Australia, retail sales rose by 0.9% month-on-month in May to just over $34 billion, topping market forecasts and matching the April gain. This was also their fifth straight month of growth, as the economy recovered further from the pandemic disruptions. The rise from a year ago was 10%, handily beating inflation. The US Treasury 10-year yield starts today 10 basis points lower from this time yesterday at 3.10%, and the price of gold is at $1,818 an ounce, and that's down $3 from this time yesterday. And oil prices are 50 cents a barrel softer at just under $110 a barrel in the US, while the international Brent price is unchanged at just over $113.50 a barrel. And the Kiwi dollar will open today lower at 62.2 US cents. Against the Australian dollar, with little change at 90.4 Australian cents, and against the euro, marginally firmer at 59.6 euro cents. That means our trade-weighted index starts today at just on 70.4 and down fractionally. Kia ora, I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.